The only purpose of the first cryptocurrency was to transfer finance. But now, coming into 2023, tokens now have utility.
So Bitcoin is a deflationary asset. After a certain amount of time, it will be quite difficult to sort of like get hold of these Bitcoins.
The more tokens, the more cryptocurrency you have, more voting power you have. Someone created Spotify, I'm not sure his name, but is he a musician? And so this is where governance comes in.
Let's get into the last panel of the day. This is all about tokenomics. If you didn't know, tokenomics is actually a part of blockchain. So we're going to get into that. I'm going to be your moderator for today. I've been thrown in. We've got Barry and Ezra. If you guys want to introduce yourself, if you want to start with Ezra.
Basically, I'm the founder of a blockchain consulting company called Wakaru. Started this maybe like 2-3 months ago. What we do is we actually create solutions for companies. So this can range from sort of like putting your existing Web2 infrastructure onto the blockchain. We can also help with sort of like NFT collections, anything sort of blockchain related. We sort of have the expertise to sort of help businesses with that. So I've got like previous experience in Web3. I've probably been in Web3 for maybe like 3 to 4 years now. Started off sort of like investing in like traditional assets, such as like Bitcoin and Ethereum. And then from there went into a little bit of gaming. And then from there been doing blockchain development. So yeah, that's a bit about me. Yeah.
Nice.
Awesome. My name is Barry Paisley. I'm the founder, CEO of Can I Store. We revolutionize rights, ownership, and financial independence for content creators. So what does that mean? We've built a licensing protocol that is 100% on the blockchain, right? That's front end, back end. Nothing's on the internet, which is revolutionary. We're starting with copyrighting intellectual property. So it could be a song, right? We protect that copyright on the blockchain. We attach legal documents to your song, right? That allows you to then prove ownership in the future if there is any sort of copyright infringement case in the future. On top of that, once you license your music, we then allow you to fractionalize your ownership to then raise funds instead of having to use a middleman like a record label to raise funds, right? So we're all about empowering content creators, starting with musicians, then going on to authors and other types of digital creators.
So for the people that don't know, can we break down what even is a token? Can I use it in a candy store? Like, what's a token?
All right, so a token, all right, cool. So there's different types of tokens. So you've got tokens that could be like basically native to that blockchain itself. So for example, if we're talking about like an ecosystem such as like Ethereum or Bitcoin, they will have tokens that are used to sort of incentivize miners or maybe incentivize stakers. So for the Ethereum network, we've got a token called ETH. For the Bitcoin network, we've obviously got BTC. But then, like, in addition to that, there can also sort of be like governance tokens, which aren't necessarily linked to the blockchain itself, but may be used as an incentive for that particular project. So, for example, for a game such as like Axie Infinity, that has its own sort of governance token, which is used for sort of to dictate like voting rights and that sort of thing. So yeah, basically tokens can be different types of things, but when we talk about tokens, traditionally we're talking about the token of that particular network itself.
Okay. So a network, a blockchain has a token, and that token can sometimes be used for voting. So you go, okay, I've got X amount of tokens, I can now vote for something. Right?
Exactly. Okay. So with the Bitcoin and Ethereum, those type of tokens are usually just used to incentivize continuous use of that actual blockchain. However, when you're talking about sort of like a governance token, that's more for like to vote on sort of like proposals on where you would like the project to go. For example, if you are in favor of a hard fork, people that have that governance token might...
What's a hard fork? Because to me, saying a fork is...
Yeah.
It was a wooden one or a metal one?
So like a hard fork basically is a software upgrade which is irreversible. Okay. That's a hard fork. So certain people might be in favor of it, certain people might be against it. And that's where sort of like the governance token and you having control to actually sort of like vote, that's where that comes into place, yeah.
So it's like there's a blockchain and then people vote that they want to change and then the blockchain now goes this way.
Exactly that. Yeah.
Brilliant. Okay, so in terms of your own personal experiences with tokens, what would you say is the one thing that you've learned about tokens that you wish you knew earlier?
Right. So when I came into the game, right, I went straight into governance, just like what you're speaking about. And to explain that, when the blockchain started, we had cryptocurrency, right? The only purpose of the first cryptocurrency was to transfer finance. But now, coming into 2023, tokens now have utility. Governance is one of the utilities that tokens provide, right? And the best way to explain governance is to say, okay, your cryptocurrency, your token that you have, right, works as a share of a company, right? The more tokens, the more cryptocurrency you have of that company is literally the more ownership, more voting power you have, and literally the more you own that platform. So the reason why that's special to my heart is because I'm building a community-owned project, right? And the reason why I'm doing that is because I'm sick and tired of the dictation that happens in current technology, right? What Facebook says goes, more meta now, you know? What YouTube says goes, right? What Instagram says goes. What about the content creators that are supplying content to that company? What say do they have? You know, so governance now means that if you are a part of a project, a part of a company, you know what? Buy more governance or acquire more governance, because now you can make votes and have a say in what happens. So for an example, right? Imagine the NHS was tokenized. Imagine the NHS had governance tokens. That would mean that service users now have a say in how the budgets are spent, instead of it being dictated to us where the budget goes, right? So for me, governance is the future of, in particular, services provided to the people, right? Because at the end of the day, if a service is built for the people, what sense does it make if it's dictated by a person that might not even be related to the subject? Do you understand what I'm saying? So, for example, someone created Spotify. I'm not sure his name, but is he a musician? And so this is where governance comes in. It takes away the ego from founders like myself to say, okay, this is for you. This is for you guys. What do you guys want? Previously, we used to give out surveys. Forget that. Forget a survey, right? Build your technology, and the service users can submit proposals and voting can take place.
So if I wanted to in the future, could I'm guessing from what I've seen, these governance tokens, these tokens, they can become more valuable over time.
Yes.
Because now the company has got more powerful, got more influence. So selling your token later on down the line, your governance token, one vote might have been worth $100 in 2018, but now it might be worth $1,000, so on and so forth. So we're talking about the tokens and the impact that it can make on community and how it's for allowing communities to do things. There's a term called a DAO. Does anyone want to expand on what a DAO is?
Sure. So a DAO is a decentralized autonomous organization. It's exactly what I'm saying, a community-owned project. Why is a DAO important? A DAO is the in-between between the service user and the person who created the platform, right? The DAO is that autonomous robot that only listens to governance, right? So therefore, it's trustless. If you created a DAO, Shen, I don't need to trust you, right? I just need to interact with the autonomous system, right? That only listens to governance and votes. So that's pretty much what a DAO is, and we're gonna see DAOs in most of the services coming into the future.
Yeah, and one of the things I've seen that's quite interesting is DAOs have now started buying businesses. So the community groups are now starting to buy businesses together. So when Dexter earlier was talking about Parners are technically very early forms of DAOs. That's what it is.
Yeah.
Man, I've been doing it from day.
Yeah.
So all it is now is that it's tokenized. So let's say, for example, Black Tech Day, if Black Tech Day was to create a DAO, we would have tokens, and then the tokens, we'd be able to go, okay, for the next Black Tech Day, which speaker do you want to see again? Which speaker do you want to see at what order? Then if we're going to go and pool funds together, and there's if each one of the tokens cost £1, there's 1,000 users, which one of the businesses do we want to give those funds to? And that would be a DAO. And then those funds from there, that company would be part of and part owned by the community. That's the way that it's going, right? So my question then is, in relation to tokens, why do some projects have so many tokens?
Yeah, so to be honest, that's a good question. And token supply does actually affect the price of the token a lot. In terms of the token supply itself, there are projects that would have a large token supply in order to reflect the demand that will be used for that token. So I'm going to go back to Axie Infinity because I'm quite used to that ecosystem. They had a token called SLP, which had an enormous token supply. And the reason that had such a large token supply was because it was used as an incentive for users within the game whenever they would sort of like reach sort of milestones. This would be a reward mechanism. So of course that would need to have a large token supply. But then we'd go to sort of ecosystems such as Bitcoin, which has a token supply of just max of 21 million. And this is what is represented in its price, right? Because it has such a low token supply in proportion to other cryptocurrency projects, it's going to have a high valuation of token price. What is actually good regarding, what's a fair point regarding that, the topic of token supply, however, is good to sort of like look at the max supply of a token when we are looking into tokenomics, because the max supply of a token will determine whether that project is actually deflationary or inflationary, which is a good thing to look at if we are in cryptocurrency to sort of make money.
So just for the audience again, just touch on what is inflationary and deflationary. What does that mean?
Yeah, so Bitcoin is a deflationary asset because it has a max supply of 21 million, which means after a certain amount of time, it will be quite difficult to sort of like get hold of these Bitcoins or to get hold of individual Bitcoins. If you then look at sort of like an ecosystem such as Ethereum, this doesn't have a max supply, which means that after a certain amount of time, because of the supply of itself, the actual price is eventually sort of like gonna sort of like go down because there's such a high supply. So it just depends on what you're sort of like investing in these assets for. If you're looking to sort of like make money, it's best to sort of be in a ecosystem with a max supply of tokens.
Okay, so in terms of the max supply, the less supply, so on and so forth, what would you say is the biggest problem that you see in tokenomics?
First of all, I think that we need to understand why we have tokenomics, all right? Why do we have tokenomics? Now, in the traditional business world, right, you have equity and shares, right? So when you do create a company in the real world, that's an economy that you're setting up. You're saying, okay, this amount of person is going to have this amount of shares. We're going to use this amount of shares for investment. We're going to use, and shares have a price, etc. Now, on the blockchain, we have the same thing, but decentralized, right? And we use cryptocurrency as, you know, as the equal to the shares in the real world. But it's not in the real world, it's on the blockchain, right? So now I've got a company in the blockchain. How do I operate it? I need tokens, right? I need tokens. How much tokens do I need? Right, what's your plan? You know, how much users do you believe you're gonna get on your platform, right? So if I'm gonna build Can I Store, which I'm building now, I may aim for 100 million users one day. So what use would it be me only having 2,000 tokens? Because that means then people are gonna be using my platform, buying my tokens, and maybe having to fractionalize them in order for it to, you know, spread around. So, for example, a company that is going to have a large community, it would make a lot more sense to have a larger token supply. Do you know what I mean? Yeah. Another reason as well, some people may have a large token supply is because they have a burning mechanism, right? So what a burning mechanism is means that after a while, the amount of tokens are going to be reduced. So all of us token holders, that's going to benefit us, right? When the token's reduced, the supply is reduced, right? And that can affect the price as well. Now, in the blockchain space, it's amazing because these tokens are not just currency that have a price. They also have the utility of, I have a say in this project, right? And it may have some other utilities, that is created by the developer. So just to understand, that's what tokenomics are. It's the economy of tokens and how you're going to use them, where you're going to distribute them to.